With that, let's actually move on to one pocket of the market where we actually had some positive news coming in, and that is the cement space. Now, some of the brokerages have been pointing out that cement prices have been hiked, specifically in the eastern part of the company. Actually, Nomura is the one that's put this out, saying that there's a price hike. I mean, their channel checks indicate of about 35 rupees per bag in East India. And this is the second such hike since the beginning of this month. Now that monsoon is pretty much it's been fading away, and August hasn't seen too much rainfall around the country. So that's the take from Nomura. Let's discuss this forward. We have Naveen Sehadeo of ICICI Securities joining in. Naveen, good morning. Thank you for taking out the time and joining in. First and foremost, what do your own channel checks indicate in East India and otherwise? I mean, what have we seen in August and so far in September in terms of price increases?
Right. Thank you. So East, the feedback is correct that East has indeed seen a price hike. And as you rightly pointed, a second round of hike of almost about 35 rupees in the month of September. But what you also have to see, or which is not getting pointed out, is that the month of August as such had seen a drop of almost about 25 odd rupees in the East region, which is not highlighted to that extent. So realistically speaking, the first hike was only to get it back to its original levels, or may I say the April, May, June levels in that sense. The second hike is very much expected, because unless until you announce a second hike, the first hike never really goes through. So sentimentally positive for sure, but you also have to take into account that August had seen a drop.
Naveen, so on a net quarter-on-quarter basis, what's the extent of a price hike in East, West, North, South, all the regions?
So assuming, let's say the second hike also goes through, your East per se will still be from a quarter average perspective, you will still see it flattish, but the exit, of course, is going to be fairly high, and that's sentimentally positive. Now, whether this sustains or goes through or not, holds on, because again, in the East region, you have festival period coming up, especially the Durga Puja and all, which sees a fairly slowdown in the construction activity, so to say. Historically, it's not just the monsoon where you see the prices bottoming out. You see December quarter also many times being a trending week. Having said that, it's nonetheless a sentiment booster. As for other regions, as you mentioned, I'll just quickly sum this for you, that North, you are seeing a marginal positive trend. So there was a hike in July, no hike in August, but again, they are keeping up the sentiment positive, but the quantums are really small. It's just about 5 to 7 rupees or so, and they were largely flat. So maybe about 1-2% kind of a hike you can clearly expect for a quarter perspective in North. Center is flattish, West is flattish, and South could actually be marginally down, because that's where the pricing competition indeed is at a fairly elevated level. So it's only East where you see a lot of hype and as if the prices are buzzing there. But I would trend a little caution there, because such sharp hike is not really warranted for any demand surge or any change in the underlying conditions as such. But definitely positive on the sentiment front, only as regards East is concerned.
Okay, got that. Naveen, also, this time, because the monsoon was quite deficient, we were also getting a lot of reports of construction having picked up much earlier than anticipated. So perhaps there's demand on that front. What do you think about that? And right now, of course, pre-elections, I understand, but do you fear that there could be any kind of challenges post the election period?
Exactly. And thank you for pointing this out, because be it, let's say, delayed rainfall or lesser than average rainfall, which keeps up the construction momentum for a longer period. But these impacts of a deficient rainfall come with a lag. So we have to take that into account. And also, it's a pre-election year. We don't have to go too far. Look at the previous election, that is in FY19. Your All India cement demand grew 13%. But in FY20, it was just about flattish. In fact, marginal negative. Even without the COVID impact in the last fortnight of March, right in the fag end. But even for the major part of the year, almost 11 months and more, FY20, the demand was just about flat. I see no reason to be it materially different. You're seeing this year demand trending very positive over 12-13% even as we speak. But next year, I see that this could certainly see a slowdown, albeit a meaningful one.
Okay, so Naveen, I'm going to ask you sort of a big picture question now. In a market that has been red hot and where mid caps have soared 100-200%, I think the mood now is let's look for ideas that haven't run so much. And comparatively, cement stocks have not been like bursting up the charts, right? So for someone who wants to perhaps make allocations for the next 6 months to 1 year, A, would you advise looking at cement? And if yes, B, then which stocks?
Yeah, in the sense, by and large, on the cement space, I don't have a very positive view, given that, prices are as unpredictable as they can be. And fundamentally, also, it's difficult to argue that they can hold on, given the underlying competition, especially with, Adani coming into picture or ACC Ambuja having big announcement plans. And in general, we have seen the competitive intensity fairly high. So I don't see a sector to be in very positive light, but within that, we certainly see pockets where you can stay invested. So in the large cap space, we are recommending a buy or rather an add recommendation we have for Ambuja, because that's where we think the volume growth and cost push, both as in the benefits of both the better than industry volume growth as well as better cost control, we can drive much better EBITDA growth. Then in the other large cap pick, which we think could be really looked at, is Grasim, where the holdco discount, because Ultratech has run up so much, and there the holdco discount has gone nearly 50%. Also, the standalone business has bottomed out in a lot of ways, and Street is not giving per se any value to the paints business, which can really throw a big re-rating if it turns out successful in coming years. So Grasim and Ambuja are the add recommendation, and the mid cap, clearly I think JK Cement continues to be a buy idea for us, and these three stocks should be looked at it if at all one has to look in the cement space.
Okay, Grasim, Ambuja and JK Cement could be some good picks within the cement pack. Naveen, thanks a lot for joining us for this very interesting chat. Always a pleasure having you on this show. But with that, it is time for a short break. The market, by the way, has just moved back into the green. It's not too much. I mean, just around 18 points in the green right now, but it's a 100-point recovery from the lows of the day. So let's get into a short